Very special guest is now joining us. The management at UPL, Jaidev Shroff, Global CEO at UPL, is now with us. Mr. Shroff, thank you so much for taking out time for us and talking to us. Could you just first start by the news flow that has been going around, where Bayer did a con call. They spoke about the drought in the European market, and of course after the acquisition, even Europe is a very big market for UPL now.
Hi, thanks. No, I think the Bayer call, there is some miscommunication. Bayer's call was about the last season when there was a drought which impacted the cereal fungicide business, and it impacted companies who have a big presence in cereal fungicide business. UPL does not have a significant presence in the cereal fungicide business, so our business was not impacted last season. Talking about next season, is very difficult to predict the weather conditions which are going to come for the next growing season in Europe, which will be in May, June, July next year, that is 2019. So we don't understand the report. That's one aspect. The other aspect is we actually had a very good year in Europe in our business. This last first 6 months of the year, we've had a 7% growth, and European business has been doing very well, and we are forecasting continuing to do very well in Europe, even as an integrated company. Our presence in Western Europe and Eastern Europe both will be much more balanced. Today our presence is mostly in Western Europe, but with the Arysta deal, our presence through Eastern Europe will improve significantly, so we'll see a good growth.
Right. So, Europe particularly, you're saying, is doing decently well and will continue to do well. And I take your point that it's very difficult to predict weather conditions. Let's talk about the acquisition. How is the deal progressing? You've announced some management changes, but the guidance that you were given for synergy benefits continue to occur over the next couple of years.
That's right. So the integration, we've put an integration team together of about 45 people from both the companies, and they have been working very non-stop for the last 90 days. We've announced the first set of new management teams across the world. That's gone down very well. It's a mixed team of both UPL and Arysta. And the next layers of management teams will also be announced soon. We are working on the synergy calculations and the cost synergy calculations, and all that is on track to roll out in the next 24 to 36 months. We'll have those in the bag, which will really help us to improve our earnings as a joint company.
Right. Let's just also, particularly talk about the size that it gives you and how does it change your dynamics in the business. So over the next 2 years, what is the size that you see UPL operating at, and how does it change the synergy benefits, costing benefits, the negotiating power that you have?
No, I think there's a lot of consolidation in the industry happening, and size matters, as we all know. Our presence through the crop life cycles across different parts of the world, across different crops, will increase. Your relationship with the farmer just won't be based on one or two products, but it'll be a whole portfolio. And I think the whole industry is moving towards a portfolio approach, towards the relationship with the farmer, and you amortize your cost of relationship over a whole portfolio of technologies. With the market moving towards more towards biosolution, we get a huge portfolio of biosolution products worldwide, which is there. We have a portfolio of climate smart technologies really help plants and become more resilient to climate change. All these technologies we're bringing in will make us a very more modern company, really ready for the future in agriculture.
So let's talk about the Latin American business, which of course is one of the key and has been one of the key to the growth of the company. So after a soft year, first 6 months have been very good, but can you just tell us expectation of soybean? Soybean continues to be in a very sweet spot in Brazil even now?
That's right. So soybean has been buoyant. I think they had some increase in acreage in Brazil because of the little additional demand from China. So Brazil is doing very well. The season is about to, is in progress. We've seen a little higher incidence of Asian rust disease in in Brazil this year. This should lead well for our portfolio, where we've launched 2 more products for the protectant segment in Brazil this last year. Both those products are patent protected, and we expect substantial growth there. And we will continue to track growth in South America as we've done for the first 6 months, where we had a substantial growth.
South Brazilian market, is there something where you're seeing increasing demand for your product or market share gains?
Yeah, so Arysta has been traditionally very strong with the cooperative sector, and that gives us a much bigger footprint in that area once the deal is done, and that will help us to gain market share there. We have very strong presence in the large farm segment in Mato Grosso and the southern area. This deal will just further strengthen our presence. Not only that, but in other crops like vegetables and fruit growing areas, including sugarcane, and give us a whole new portfolio and help us to continue to grow.
If we look at the markets or investors of the company, they would be worried about 2 things. With the sort of global trade wars that's going on, what can be an impact for a company like you? And with the sort of currency moves that's going around the world and the way it is going in, it could have a big impact not on your business but on your margins. So how are you arresting that?
No, I think UPL is a global business. Arysta is also a global business. We've been doing business globally. Our presence around the world in 132 countries. We understand the risk management in terms of managing currency risks, and we've been in Argentina for the last 25 years, and they've had so many shocks. We always manage to adjust and deal with the challenges. The farmers buy our products when they need them, and they pay the value for what they need. And eventually, if you look at the production of all the agricultural chemicals, is primarily dollar-denominated markets, or all the pricing is in dollars. So eventually, all the suppliers adjust their prices when there is in a crisis market. So in the short term, for a quarter, you could have an issue. But over a period of a year, you always adjust prices to deal with the currency impact. And that's normally a pass-through in our industry. So we don't see that as a major impact. You always have an impact in one quarter, or, it depends when the currency hits. If it's in the middle of the season, you can't change prices immediately. But post that, you adjust, and farmers understand, companies understand.
Just one quick question, sir. Your company's mantra has been to give low price, good quality products which will make their ways and inroads towards various farmers across the world. That continues to be the growth mantra and market share and leading to market share gains?
Absolutely. I think when there is a crisis, farmers trade down a little bit, and UPL is there to gain from that. And we really offer value proposition with the best technology available, and with a very strong manufacturing base. We are able to be competitive and give value to the farmers, and that's been typically we've been able to gain market share in almost every market we've been present in the last 15-20 years. So why should we give that up?
Right, sir. Thank you so much, sir, for taking out time for us, explaining to us what's the way ahead. That was the management at UPL, confident that European business, European presence will increase, and Brazil soybean continues to be in a sweet spot.